Welcome to Trading Lounge and the Asian Report. We'll be looking at the ASX, the Nifty and the S&P 500, and starting with the daily chart here. It's the 27th, of course, of February, and we've been tracking 5 waves to the upside here in terms of 1 and 2 and 3 and 4 here, and 1 and 2 and 3 and 4 and 5 here. So we're pretty much at a top here, and we're seeing a bit of a sell-off here at this 62 number here. So in geometry terms, we can look at that as 61.8. Yeah, but also too, we know that we've got resistance over here as well. So we need to come up with a strategy here to be, first of all, even though we're pointing it out to be a top, we don't have enough evidence to call a turn in the market just yet. We've seen a sell-off there. We expected that. However, there is a strong trend here, and fighting the trend is not always such a wise thing to do. So we're going to have to look at strategies around this particular point and take it step by step. And if you're trading, then keep those position sizes small, and we can build into a trend if there's going to be a turn. So what we've been looking at here was wave 3 and wave 4 here, then wave 1 and 2 here, and wave 3 and 4 here, and then counting 5 waves up here. Now this hasn't finished off very nicely here for me. I know that I can look at this as 1, 2, 3, 4, 5 for 1 here and 2 here, and then 1 and 2 and 3 and 4 and 5 here, and then 4 here and 5 here. So it's a little bit small in this case here. I also know too that it's possible to have this over here as wave 1 here, wave 4 there, wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here. That looks a little bit better. But on the US markets, we've got this as the wave 4 here. So I kind of like to leave it lined up like that. But the problem with the other count here that I just want to point out too is that if I bring these back over here and put wave 3 here and 4 here and oopsie-daisy, wave 1 here, I mean, we need to look at the scenarios here. So, and wave 4. So in this case, we look at wave 1 here, wave 2 here, wave 3 here. The wave 4 is pulled back too far here for wave 1. It's overlapped wave 1 here. It's funny thing is, on this particular market, the move coming down through here appears to be in 3 waves, an A and a B and a C. On the physical market, the cash market, it appears to be 5 waves moving down through here. So obviously we can put, I'm not sure about the top here, and like I said, we just need to be a little bit careful. We could certainly look to trade the low out here, a breach of the low here, so that's something that we can do. With the S&P 500, if I can just bring that in for a moment. So the S&P 500, we're looking at wave 3 here, ABC for wave 4 here, and then 5 waves up here to finish this off here. So this has dropped as well here, and this also appears to be 5 waves here for this stock, for this market. But on the cash market, when I pick up wave 4 here, it doesn't appear that we've got 5 waves up here. So let me just this is just a 5-minute chart. So from that low here, we can see we've got 1 and 2 and 3 here. So I've only got 3 waves moving up here to finish. So that doesn't really look good either. So, but the same thing again here as well. It's very difficult to call this down as wave. Well, here I can count that as down as an A and a B and a C wave to this low here. Maybe we could call that wave 4 and wave 5 here. I'm not sure, but the point is that it's overlapping the top of this structure here. So it's difficult to call it a fourth wave. It certainly could be. It certainly hasn't taken the low of this wave, this low out here. So it can be 1 and 2 and 3 and 4 here, and having one more move up here. So once again here, we don't have a market that's finishing very well here. But what we could do is we could look to short new lows in this space here as well. So let's just go to the back to the ASX200 here for a moment. On the 4-hour chart here, we'll go to the 1-hour chart. I mean, we're splitting hairs here, but See, this, when we were counting it the other day, we were looking at from this wave 4 here, we're looking at this as wave 1 here, wave 2 here, and then 1 and 2 here, 3 and 4 here, we're going well here, and then up for wave 5 here of 3. So we can bring that right in here. But to be honest, I can put this as wave 4 in here because we've got a nice little ABC pattern here. I've got all my from this 4th wave to this 5th wave here, I've got my little 5-wave structure in here. So that's neat and tidy. The wave 4 here is rather small. I mean, it's smaller than the previous degree of structure, which shouldn't be the case. But then I do have a wave 5 up here. So, naturally that should be the count, but it just doesn't have the right look and feel about it. As such, but technically it's correct. The other point here is that the move down here is an A and a B and a C wave down here. It appears that it's in 3 waves here, not 5 waves. The move up here, that's moved up to the 61.8%. So in a nutshell, we just got to have a bit of strategy here. So the situation is that this top here, if that's breached, then we can go long from that point. We could also look to go long by just putting that across here, or technically going long on 6172 would be a catalyst for a move to take us higher above 6200 here. So and then that way we'd look at this. See, the other way to look at this is wave 1 here and wave 2 here, wave 3 here, and then having this as wave 4 here, but it overlaps here, so that doesn't sort of work either. So technically this is the best fit that I've got, but I don't have a good 5-wave structure coming down through here. So if this market was going to move higher, it does appear that we've got like a move straight up to the 61.8%, and if that was going to correct after 5 waves, we can get a correction of an A and a B wave and a C wave. This is the 61.8% here as well. So I like to go short under number 2. So this 612 here, if that became the retested resistance, then we can look to go lower at that particular point. But any move down through here would see a bounce off here as well. So you need to be mindful of that and hold that. And then if it does move down, then we consider this number here, the 100, and we consider group 1 above it and group 2 below it here. So the other trade would come in moving to the downside would be looking at this group 2 here becoming the resistance here, and that way that you know that if this is the resistance, then the market's going to leave this number here of 100 and move to the downside. So for the day traders here, it's long pretty much on the break of that trend line, but let's just use the levels a little bit here. So obviously we can go long above here, but we can also start to build in a position if this area here becomes the support. If group 2 becomes the support, currently it's at the resistance, isn't it? It's come back up and met supply just meaning sellers. So it's come up and it's tested those guys are too strong and it's pushed it down. But let's just see after a correction if it can push up from that point. If it can push up from that point, then it's going to take that supply out, and then it will keep moving to the upside here. Okay, if it moves to the downside, well, then we can start moving into this here. So we need to be a little bit tactical because we are fighting a trend to the upside. There's plenty of news coming out of the US this week. We've got enough to rock the markets a bit. We got Donald Trump talking to Kim. They're a likely couple of lads, aren't they? They're not. They're not big on modernisation or change or communication. So, but anyway, Donald seems to like dictators. So, they'll probably come out with some agreement that suits Kim. So I don't know how that's going to react to the markets. And then they've got the closing in the circle with Donald Trump in the US. The Mueller report won't come out until the following week, but the Cohen report will be out as well. So there's enough to rock the boats, and anything can come out of the gate there. So yeah, okay. India. So with India here, we were looking at, I'm just going to stay with the hourly chart here because we know the story. We know that this is the 61.8% up here. If this area here became, in the bigger picture, if this became the support here, if the 11,000 became the support, then we would be bullish from that point. But while the market has been testing it here, we need to, we need to look at the bearish side and the bullish side. So the bearish side is that we've got the move down through here. It appears to be in 5 waves down here. So we were looking for a move to come back into 10,900 area. We've got that. So, and we've got a sharp move down here now. So we're sort of closing in on it. So if we take this low here and this high here, we can use the Fibonacci is sitting on the 61.8%. That's handy. So we can put that in there. So that means now we can lift this one here. If I can just take this here, we can lift this under this level now. So that's 10,000. There's a 72 number in there, 10,720, I'd imagine. So we can look to go short from that point there. We could also too, as I mentioned in this little picture here, as an A and a B and a C here. So we've got this A, B, and C wave coming in here. So technically we could grab that there. I'll put it under here, would be fine. So this is 8's a very important number. So if that becomes the retested resistance, then you can get a position in there. So what we can do is we can build into the short side if that's going to be the case. Okay, so if 10.8 becomes the resistance, then look to get, let's just say, one position. If this one here becomes the resistance, then you can pick up and get 2 positions. And then once the 10,650 here becomes the resistance, then you can put in a third trade in this space here. But obviously there's going to be a bounce off this as well. So it's something else that you need to consider as well here. So this will come down to these lows here, and it can bounce all the way back into this space before moving down in that regard. So you need to be mindful of that. Yeah, so let's just see how that goes. Because we're above the 61.8% here, then we also should be looking at a situation in case we're wrong. So let's do that. So in this instance here, I'm just going to copy that. I'm just going to put that up there, but I'm also just going to make this a little bit smaller here as well. So it just means a small trade in that section here. I better copy that, put that back there. Because a smaller trade here, if it breaks a new high here, because we're not sitting on the 11,000 yet, so it will be at risk. And what it will do, if you put too much capital in here, it's going to tie you up here. And it's not the capital that's going to be the problem here. It's your own attention that will be drawn and stuck there. You'll be stuck there with the market, and you don't particularly want that. You're much better off. It's okay to have skin in the game to spark the attention, but at the end of the day, we'll need this level here as support, and it will take time for that to develop in here. So there's never no rush at a big number, and you're far better off waiting. Because then you early in your stages of trading, you become trigger happy in this space here until you lose enough money, and the penny drops that you need to work with the market. Market's the boss. You're just the employee, and you need to do what the market says. So rather than pushing buttons earlier. All right, enough waffling for this morning. Okay, cheers.